constant in life is change. But if that change brings about uncertainty in life, then the upheaval starts. Budget, elections, RBI policies, the geopolitical scenarios, all this is making the investor uneasy. These are the things that we will be discussing in today's Investors Hangout, brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. A very warm welcome to the CEO of Value Research, Dhirendra Kumar.
Thank you.
Dhiren, a warm welcome indeed, but a very hot question that I'm going to be asking you is, what should I as an investor do if all around me is uncertainty? I do not know. I know what budget has in store for me. I do not know what elections are going to bring for me. I do not know what RBI is going to come up next with. And of course, the US-China war has major repercussions on us.
Yes.
How can you help me?
I can't help you. You have to help yourself. Most investors have to help themselves because it is actually, trying to focus on what you can control. You can't control any of these things.
Right.
You can't control what happens with US-China trade war, what happens to, what's
Indo-Pakistan,
the Indo-Pakistan, tension, or the surgical strike, and the market was nervous. What will be the election outcome? You can be thinking, you could be optimistic, but you don't know what the outcome will be and what the market reaction will be. So you have absolutely no control on all the external things. I would rather call it a noise, because and the only way to deal with it is have a simple plan. Manage what you can, focus on controllables.
Okay.
What you have a control on is having a careful assessment of the money that you are likely to need in the near term, the money you are likely to need in the medium term, the money which you are unlikely to need for a long period of time, which is your long-term investment, and earmark that money to appropriate assets. Be regular with your investing. Don't get carried by these wild swings of the market, because this is the kind of market where many people. I got one of my friend calling from a very far off place where he has accumulated all his savings, and the news that he got was that the market is going to tank, and it'll drop freely to a very new low. So is it time to really pull his money out and wait for that time to get in again? And after he called me, over the next 6 days, the market has gone up by about 12%. So I don't know. You just don't speculate. Focus on the controllables. Worry about things. Tweak this allocation if this changes with the outlook for your job. Maybe worry about it. Maybe make those changes. Something which was long term, now you have to be prepared for the medium term or the short term with a more conservative allocation. Focus on what you can control. Stick to a plan and don't get unnerved by this. Markets are like this only. I recall a famous JP Morgan quote when some journalist asked him that where does he think how will the market behave? His classic answer was, it will fluctuate. So fluctuating market, just get used to it.
Correct.
It fluctuates every day, sometime in a very unnerving way, sometime in a way that will please you. But over a period of time, it does well. And if you are not well configured, you can't help but panic from this uncertainty. Because if you put your short-term money into equity, reason to panic. If you put your medium-term money into speculative equity, you have reason to worry. So if you're properly aligned, I don't think you will be, but it takes time to get used to it. Whatever said and done, when you see something, when 2008 happened, the market fell freely, and the best performing fund, the fund which actually gave 100% return, 107% return in 2007, was the one which actually lost 70% in the next 4 months.
Wow.
So your 100 rupee becoming 200, and then getting reduced to 60 rupees. That is something which is not comforting. So it's far easier said. For new investors, getting started, and getting started with the appropriate vehicle, something. And so two things: one is how critical is that money and how experienced you are. I don't think even listening to hangout will help, because when you see your 5 lakh rupee getting reduced to 3 lakh rupees in no time,
You will panic.
you panic. So don't be in such vehicles to begin with, as we keep saying that start your investing with a balanced fund. Maybe even more conservative investors should be doing is SIPs in equity savings fund. Only after you have seen a full market cycle, 3-4 years, you understand what this animal is. It is a wild animal, and if you are able to tame it, then it actually helps you reach better,
But you
faster.
can't tame it now. It's not in
You
your
can't
hands.
tame it, but you just have to reconcile with it, how to make best of it. Because this wildness of the market also creates the opportunity. If you're a regular
True.
investor, this wildness, while it is depressed, last episode somebody was asking that, last 1 year he has not made any return. It's good news, but it's very disappointing.
Right. But that gives him
Yeah,
the
that gives him-
opportunity to gather more money.
optimize or
Yeah.
maximize the return, enhance his returns.
Okay, so what I gather from all this that you're saying is that we should keep our investments, our approach very simple.
Simple, aligned with
Don't get
aligned with the time frame.
time frame. Okay, right. But what about the issues like the Z issue that came up, the ILNFS issue came up, the credit worthiness issue that I'm talking about? I mean, it's bound to affect you.
Oh, those are real issues.
Yeah.
That causes greater anxiety. But you have to really believe in the design of things. What happens? Of course, there is great noise about it. It can potentially harm. So far, it has not hurt many investors.
Yeah.
But it can potentially hurt many investors if the doomsday actually turns out to be true for some of these companies. But this is where the diversification comes in. That is why you invest in a mutual fund.
Right.
You have to see that, assuming Z Entertainment, the promoters have pledged their shares, and they were unable to honor their promises, and somebody sold their shares in a hurry, and it went down in value by 26%. I don't think of course that can have a lingering effect. If it would have continued, if that issue was not addressed in some manner,
Right.
then it could have caused more panic, and then you get into a negative spiral. Stock going up, down dramatically, more people turn up to sell. That drives it down further and faster. But that in itself, if you have 5 lakh rupee or 5 crore rupee or 50 lakh rupees invested in the market through these 3 mutual funds, I don't think all of it is going to be, your exposure might be 1% or 2%. That is where diversification comes in. Fixed income fund, also, 2-3 funds had an impact of 1 to 2% on a 1 day basis. And good part of it would have been recovered. It is actually reducing your return sometimes. And hopefully some of those issues will also get addressed. And so I don't think, you have to really believe in the design. First is control the things which is in your control, as I said earlier, aligning right kind of money and in line with your experience.
Okay.
Don't get venturesome. And second is believe in the diversification. And over 4-5 years time, even a 2% decline or 0.5% decline is not going to have a substantial effect. Don't get speculative with things. Real problem is when you have such exposure, substantial exposure to one such company. That is something which people should avoid.
Okay. So diversification can take
Diversification
care
is
of.
the only risk, is the only shock absorber that you have.
Okay. So if I'm an investor, we've discussed so many things that, okay, you need to do things which are in your control. Okay. But as part of my strategy as an investor, what are the things that I should keep in mind if such a scenario, and these scenarios, as you very rightly said, are cyclical, and these things will happen no matter what. So in that case, please point out 3-4 things that I as an investor or our viewers must keep in mind.
One is that listen to these news and don't get worked up.
Not us.
No.
Okay.
Listen to the news, but don't get worked up.
Okay.
And also, develop some framework of filtering the noise. That you listen to a news and then you think that okay, this could be a very bad news for investments. But try and recall that did it really hurt some? And similar thing would have happened 3 years back, 4 years back, 5 years back. What happened after that? We keep listening about, hearing about election results. What I have saw in the last 8 elections, that the behavior of the market is random. Sometimes it goes up, sometimes it goes down, and generally it is not affecting, because over a long period of time, if companies make money, stock prices go up. And
Right.
if they make more money and faster, stock prices go up more, faster, more quickly. Phenomenal gains in a brief period of time. Likewise, compression of earnings, companies stop making money, facing problem, economic downturn, they have a problem. But in both the cases, hard to anticipate. And if your time frame is fine, so having your basic rules in place, devising a mechanism of not getting swayed by the noise, all the kind of news that you hear, you don't have to necessarily act. If you have your allocation right, in line with your time frame and in line with your experience, just stay calm, ignore the noise, have fun, feel happy, maybe uh, spend time not consuming the news.
And do not time the market.
Don't time the market, because don't get speculative, because, and this is more important, if you are able to devise an investment rule for yourself, that you'll be consistent with your investments, which is
Right.
in line with your income, savings, and you will be at it. Because many a times I see that this anxiety gets built up far more with people who get excited about investments, and they start investing and they start playing a game, and when the play gets rough, they try to run away.
Yeah.
It's not a game, it is your lifetime. You are actually buying your future, you're postponing consumption for future consumption.
Okay.
So for future, so you have to really look at it that way. You have to be very consistent, rule based, and methodical about it.
Okay. So what Dhirendra is saying is that stay calm, no matter what. Stay informed, right?
Yeah.
And avoid the unnecessary noise.
Never act in a huff,
Never. Yeah. Impulse नहीं
Yeah.
होना चाहिए ज़्यादा, हाँ. And choose the right asset class, invest systematically, and do not time the market. So if you follow these rules, uncertainty will not affect you so much.
Yes.
Okay.